Maxis saw its third quarter net profit dip 3% to 315 million from a year ago due to the one-off prosperity tax. Revenue for the quarter grew 6% to 2.41 billion from 2.27 billion, driven by a 3.7% increase in contribution from its service revenue. The telco declared a third interim dividend of 5 cents per share, bringing its cumulative dividend so far to 15 cents a share. According to Maxis, its postpaid segment grew by 6.4% during the period, bringing its total number of subscribers to 3.27 million. Its home connectivity business also saw double-digit revenue growth of 16.2%, bringing the total home fibre connections to 652,000. CEO Gohan Ut says the telco is pleased with another strong performance for the quarter, which he says underlines its stability in building the foundation for future growth. He adds that Maxis is looking forward to bringing soon the best of 5G services to its customers who are now able to sign up for 5G device offers. For its FY22 financial outlook, Maxis expects its service revenue to be a low to mid-single-digit increase, taking into consideration the domestic and global economic outlook, rising inflation and interest rates. It also expects its EBITDA to be a flat to low single-digit increase versus FY21's. Meanwhile, Maxis said its capital expenditure for the quarter stood at 272 million, adding that it continued to significantly invest in its own network and fulfilling its commitments to the national digital network. Tax and accountancy firm Thornton Malaysia has come out to defend its MD, Dato' Narendra Kumar Chunilai, who was slapped with money laundering charges involving 115 million belonging to Sabah Forest Industries. He was charged in the Sessions Court on November 3rd in his capacity as a receiver and manager of SFI for purportedly transferring 115 million of allegedly illegal proceeds from SFI's CIMB current account to the company's CIMB interest-bearing fixed deposit account in February 2018. In a statement issued today, Thornton Malaysia said that NK Jasani will be defending his charges vigorously and noted that he has always acted in the best interests of SFI and the company's creditors. The charges levelled against NK Jasani are framed under Section 41B of the Anti-Money Laundering, Anti-Terrorism Financing and Proceeds of Unlawful Activities Act 2001. The 115 million involved are part of a 120 million deposit Pelangi Prestasi, a company owned by Tycoon Tan Sri Said Mokhtar Al-Bukhari, paid SFI for the purchase of SFI's assets for 1.2 billion ringgit. Thornton Malaysia explained that this sale and the treatment of the deposit paid are matters that have been and are still pending legal proceedings before the civil courts. If found guilty, NK Jasani could face up to 15 years in jail and a fine of not less than 5 times the proceeds from the unlawful activities, or 5 million, whichever is higher. The Sessions Court allowed him a bail of 350,000 with 2 sureties and fixed January 5th, 2023 for mention for the submission of documents. Westport's Holdings net profit for the third quarter declined 24% year-on-year to 150.4 million, mainly due to higher fuel cost and a one-off sundry income that was present in the third quarter of FY21. This was despite revenue for the quarter improving marginally by 3% to 520.4 million from 504.9 million ringgit. No dividend was declared for the quarter. Reviewing its performance, Westport attributed the higher revenue to the growth in container revenue. Group MD Dato' Ruben Emir Nyanalingam Abdullah says global inflationary pressure, China's zero COVID policy, geopolitical tension in Europe and market uncertainties are among the factors contributing to slower economic activities in 2022. He adds that the container throughput momentum in the current year could moderate downwards towards a marginal single-digit decline. However, Ruben notes that the local economy is currently relatively less adversely affected and that the disruption in the supply chain had eased. Meanwhile, despite the year's current challenges, Ruben says the company is committed to achieving net zero carbon emissions by 2050. He says Westports will focus and rely primarily on emissions intensity reduction and gradual decarbonization of its fleet of terminal operating equipment. Kuala Lumpur Kepong is considering raising its stake in British chemicals company Synthoma as it looks to further expand its specialty chemicals business globally, two sources told Reuters. KLK is talking with at least one financial advisor to explore potentially boosting its 26.3% stake, said the sources with knowledge of the matter. According to the Reuters report, the stake purchase could comprise primary and secondary shares, and it is not immediately clear whether it will acquire a controlling stake. KLK is the largest shareholder of Synthoma, while the second biggest shareholder is UBS Asset Management UK with a 5.01% stake, followed by M&G Investment Management with 4.99%. KLK and Synthoma declined to comment. The London-listed company contributed equity profit totaling $260.6 million to KLK in the fiscal year ended September 30th, 2021, according to its annual report. Synthoma has been expanding aggressively with the aim of becoming a leading global supplier and maker of polymers. Last year, it acquired the adhesive resin business of US-based Eastman Chemical Company for $1 billion. Kaylee Holdings has rejected a requisition claim from 5 shareholders to convene an EGM on the grounds that they do not hold in aggregate at least 10% of the company's issued share capital. In a boss filing, the troubled lingerie maker called the notice invalid. The shareholders, former executive chairman Datin Sri Jesse Wong Xiao Pui, Zhang Jia, Liu Bun Kin, Dato JP Lau Kok Chuan and Cheng Kui, had in their requisition notice dated October 21st requested for the EGM to table a total of 14 resolutions. Among others, the resolutions pertain to the disqualification of 12 shareholders' rights, the reinstatement of the company's previous lawyers, Messrs. Bachan and Kata, and the barring of the company from withdrawing certain lawsuits. They were seeking to disqualify Kaylee's founder and former executive director, Datin Fung Nyok Yun, and her husband, Dato Chua Chin Lai, and 10 other shareholders from exercising their rights as directors or shareholders of the company, as well as voting on any resolutions of the EGM or any other meetings. These 12 shareholders own an aggregate 50.01% stake in Kaylee as at May 25th, according to court documents cited by The Edge.